So stocks on a buy signal are good candidates for purchasing call options, as the most likely future price direction for the stock is up. So remember, if the stock continues to move up in price, the value of the call option will continue to increase. So now we'll look at using the Keltner channels to help us time our entry point for a call option purchase. Step 2 in our process is to select stocks trading in the Keltner channel buy zone to determine an entry point. And we use those Keltner channels to help us time our stock and call option purchase with a lower risk entry point. Right now I'm displaying the Travelers Insurance Company price chart, and the vertical red and black lines represent the daily price movement of Traveler stock. Now in this chart you can see the price moves from lower left to upper right, and if you want to participate in this trend, if you don't own Traveler stock or Traveler's call option, when it's in a strong price uptrend like this, going from lower left to upper right, is it too late to enter this trade? So if you want to participate in this rally by purchasing a call option, the question becomes, at what point should I enter a call option trade? Because you can see it's already been in a very strong price uptrend. So we use the Keltner channels to help us time our entry into stocks that are in a price uptrend. And as I mentioned, the vertical red and black lines represent the daily price movement of Traveler's stock. And there's 3 channels in the Keltner channels. This upper blue line right here is the upper Keltner channel, and the middle line, the dotted line, is the middle channel, and the lower line is the lower Keltner channel. Now the Keltner channels act as an overbought, oversold indicator, and stocks normally trade inside of the upper and lower channels. Now when a stock is trading above the upper channel, it is getting overbought and normally trades lower. So we can see that with the daily price movement for Traveler stock, we can see when it traded up above the upper channel, it was getting overbought and then normally retraced. So we can see a pattern. Stock got overbought right here. It was trading above the upper channel, retraced, got overbought, retraced, and got overbought here, retraced, overbought, retraced. So we can see that once the stock is trading above the upper channel, it's most likely to retrace as the stock is getting overbought. So when a stock trades below the upper channel, it's no longer overbought and normally rallies higher. So we can see with the price declines for Travelers, we can see it got overbought, retraced, and then rallied again. And we can see that pattern of overbought, retraced, rallied, overbought, retraced. So when it traded below the upper channel, it was no longer overbought, and it's likely to rally again after trading below the upper channel. So when a stock trades below the upper Keltner channel, it's in a Keltner channel buy zone, and the stock or call option can be purchased. So we use these retracements after the stock's been overbought to enter either a stock trade or a call option purchase. So that allows us to participate in a rally, a stock that's in a price uptrend, and can give us a lower risk entry. So buying a stock when it's trading in the Keltner Channel buy zone increases our odds of getting a low risk entry, as the stock normally rallies when it's trading in the buy zone. So we circled several times when the stock was in the Keltner Channel buy zone, and you can see each time that it rallied after being in the Keltner Channel buy zone. So we had numerous opportunities to get a lower risk entry point for travelers using the Keltner channels. Okay, so once we select an entry point, step 3 in our process is to use what I call the 1% rule to select an in-the-money strike price that can result in a higher percentage of winning trades.